Before we dive in, ask yourself this. What if Bitcoin is entering the exact same dangerous situation that once marked its previous market peak? Because right now, something is unfolding on the charts that looks eerily similar. And if history repeats itself, the consequences could be bigger than anyone wants to admit. I want you to look at what's happening with fresh eyes. The signals are clear, they're developing in real time, and they're hard to ignore. This may be one of the most critical tests Bitcoin has faced in years. Hey, welcome back. My channel name is The Crypto Loop, and here we look at the data, not hype, not opinions, just facts that can help you make better decisions in crypto. If you want analysis without sponsorships or agendas, you're in the right place. Hit subscribe and let's jump straight into the chart. So here's what almost nobody is talking about. Bitcoin is currently flashing a major bearish divergence, and not a small one. The last time we saw a divergence like this was back in 2021. Price kept climbing higher while the indicator kept trending lower, and that exact pattern marked the top of the bull cycle. Back then, it took around 300 days to form. This time, the divergence has been building for roughly 500 days. 500 days of pressure building under the surface, and now the big question is, how long can this last? Price has made multiple higher highs over the past year and a half, yet indicators have made lower highs across the board. That creates textbook bearish divergence. Price going one way, indicators going the opposite. Historically, that means the market is stretched to its limit. It doesn't tell us when it will snap, just that tension is there. Divergences can last weeks, or in equity markets, even decades. So we need deeper clues, and that's where the other indicators step in. Let's start with something simple but powerful. The 21-period moving average on the 2-week chart. Throughout this bull run, price has consistently pulled back toward this moving average, but never closed below it. It has acted as reliable support for years. But now, for the first time in this cycle, the candlestick is attempting to close below it. That's not a minor detail. It's the first sign of potential weakness in a trend that has been strong for a very long time. And if Bitcoin fails to reclaim this level, that's when the alarm bells get loud. But before calling the cycle over, we need to cross-check with what's happening beneath the surface. Look at the RSI. Most people already know the RSI moves between 0 and 100. The lower the number, the higher the selling pressure, and we just dipped back toward the 40 zone, an area that Bitcoin rarely visits on the 2-week chart. The last time we were here, the COVID crash when Bitcoin shot up from 3,000 all the way to 69,000 before that, the 2018 bear market bottom around 3,000, and before that, the 2015 cycle low. Seeing the RSI this low historically has been a massive buying opportunity, not a major top. That means while the bearish divergence looks threatening, the RSI is telling us something completely different. This market might be oversold, not overheated. Selling pressure appears extreme, but in the past, that has often been followed by explosive upside. And yes, this might be another one of those deceptively powerful moments. But we're not done yet. The stochastic RSI is currently below 20, meaning momentum is dead. When it's down here, price almost always keeps falling until the indicator crosses upward again. And on the 2-week chart, that cross only happens about once a year. Yet every one of those crosses in this cycle has marked massive upward moves for Bitcoin. The surge from 23,000 to 70,000. The breakout from 50,000 to six figures. Another move from 70,000 to 125,000. All of them each time confirmed by the stochastic crossing upward. Right now, that cross hasn't happened yet, which means price may continue drifting lower until that momentum shift arrives. But when it does, it has historically signaled the beginning of the next major leg up. Now let's talk about something more strategic. Market structure. People keep shouting that Bitcoin is in a bear market. But there's one line on the chart that matters more than anything else. The 70,000 zone. This level was resistance in 2021, again in 2024, and became support later in this cycle. If Bitcoin closes below 70,000 and starts using it as resistance, then yes, the bull market structure breaks. Until that happens, Bitcoin is still in a textbook pullback, nothing more. And now one more piece of the puzzle, sentiment. The fear and greed index is sitting in extreme fear. Everyone is panicking. Whales are selling. Social media is in meltdown mode. But historically, when fear runs this high, smart money buys. In fact, during the last 5 years, if you bought Bitcoin at the absolute worst possible time, but simply held for long enough, you still ended up in profit. Bitcoin has always rewarded long-term conviction and punished emotional trading. And right now, the market is giving another moment where fear could be hiding opportunity. So here's the honest takeaway. Yes, Bitcoin looks vulnerable. Yes, the bearish divergence is real. No, it's not guaranteed the market will crash, but the risk is real if price fails to reclaim support. At the same time, RSI and historical sentiment suggest this downturn could be a blessing in disguise, signaling exhaustion among sellers rather than the end of the bull market. The next major move will likely be determined by the stochastic RSI cross. Until that happens, patience is your greatest advantage. If you found value in this breakdown, make sure you're subscribed. For those who have supported the channel for all these years, thank you. You know the rule. Ignore the crowd. Trust the data. The rest of the world reacts emotionally. We react intelligently. I'll see you in the next one.